All right, everyone. Welcome to another live stream. All right, we have a little bit of a new setup today, and today's date is going to be July 15th, 2025. Current time is going to be 7:33. We're running about 3 minutes late. So let's see if we can find some stocks to trade for today. All right. All right. Let's see here. All right. All right. So first things first. What we're going to be doing, and like I said, guys, I'm new to this new whole doing lives and everything else like that, so please bear with me. Hopefully in the next 2 to 3 weeks I will be a lot better at it, and therefore and we can much have probably have prettier, better videos. All right, so just bear with me here as I'm kind of getting everything together. All right, so the first thing that we normally do, just like in every other live stream that we have, we go over to investing.com, and what we're going to be doing is we're going to be verifying, well, we're going to be checking to see if there's anything that we need to be concerned about for, um, let's take a look here. Um, for tomorrow, what we're looking at is we're looking at our economic calendar here. And what that's going to tell us is there any major news or events that's going to be happening? And what we're primarily looking for is we're looking for the 3 stars, which are going to be high impact to the stock market. And the second thing that we're going to be looking for is a cluster of 2 star events that's going to be happening. All right. Now, for those of you who have taken my course on Udemy, I everything that we're going to be using, every website that we visit, every tool or resource that we use in these videos, there's a free version and a paid version. There's a free version of investing.com as well as a paid version. I'm currently using the free version. This is why you see all the ads popping up. Um, and here, what we can do is we can see at 8:30 we have one item coming up, which is the PPI month over month for the month of June. For the month of June, that's a 3 star event. Um, and like I said in the previous videos, if you just click on these right here, it will load up and then you'll be able to see exactly what it is. You don't need to know exactly what each one of these reports are. You just need to know what industry they affect. Like here, we have mortgages refinance index. We know that deals with housing. So if this was a 3 star event, then we would actually try to stay away from banking stocks or any mortgage company stocks or anything that deals heavily with retail. But this right here is a 1 star. So the next one that we have here, we have a cluster of 2 star events happening here. Industrial productions, year over year, month over month. Um, what else do we have? Yeah, we have crude oil inventory. And I've been saying this for a while. Like, I'm kind of a little bit on the edge when it comes down to oil, especially with everything that's happening right now between the Middle East, Russia, the US, and our European allies. So with oil, I kind of staying away from it a little bit. As you guys, if you guys remember, or if you guys have watched the previous video from yesterday, then you would see that there was a few oil stocks that we had, well, that I had on my watch list, but I never ended up trading them because you know I just don't feel too comfortable with what's going on with oil right now. Nobody knows what's going to happen. Oil prices could shoot up, it can shoot down. We just don't know right now what's going on. So anything that's highly volatile or there's a lot of uncertainty about it, I always tell my students that are new traders, just stay away from those things and just try to go for the stuff that are a little bit more certain. Okay. Here we do have the Fed that's going to be speaking, one of the Fed chairs that's going to be speaking. And this is kind of normal. They always speak. It's always considered a 2 star event. But until Powell speak, which is the head of the Fed, until he speaks, I really don't pay that much attention to these guys here. And the reason for that is because, like last month, a lot of them were saying, oh, well, there's an indication that for the month of July, we're going to, drop the interest rates. And then all of a sudden that went up in smokes and that doesn't look like it's going to happen. So now I'm just kind of like, it happens because when Powell speaks, that's when things happen, you know? And over here, we have a few more people speaking. So nothing really major is happening tomorrow that's going to say that I would recommend to my students, or I would recommend to you guys that I will say, hey, hold off on trading tomorrow. There's some big news coming out or anything else like that. And the reason, and that's one of the reasons why we check this. We check this to see if we're going to be trading first thing in the morning, or if we need to hold off until later on in the afternoon. But really, that's the primary reason why we look at this economic calendar over here. All right. So once we're done with the economic calendar and we know that we're going to be jumping into trades and there's nothing here that's going to stop us or should stop us, the next thing we're going to be doing is we're going to close this off, and we're going to go over to FinViz, and this is our stock screener. All right. And over here, as usual, we're going to go ahead and we're going to filter through all of the stocks that are out there, and we're going to see if there's any possible good trades for us. As you guys can see here at the very beginning, there is 10,248 stocks in total that's out there. And what we want to do is we want to go ahead and filter that down to roughly about 100 or maybe even 53 different stocks, right? One of the things that happen with a lot of new traders is the fact that they um, they lose because they're forcing trades. They lose because they're forcing trades. They don't know how to filter through all of the stocks out there, how to find stocks that fit a particular criteria, and therefore they're just going online or hearing somebody say something on TikTok or Instagram about stocks, and they're just buying the stock without necessarily knowing much about it. So in my course that I have on Udemy, what I do is I teach all my students how to filter through these stocks, assuming that you're starting off with a $500 account balance. And one of the things that I'm realizing now, especially because now I'm actually on social media, I'm actually on TikTok, I'm actually on Instagram, and I'm realizing these guys that are trading stocks with $20,000 or $100,000 accounts, these are the traders that beginner traders are watching. And beginner traders are watching people who have maybe a $5,000 or a $10,000 account who's heavily leveraged, and they're thinking that they can do the same thing and make hundreds, if not thousands of dollars on a daily basis. But these accounts are either heavily leveraged or these individuals have high volumes, have a lot of money put in their account. So what I typically, tell new traders, especially people who've taken my course, is trade like you only have $500. Don't look at the guy who has, 10,000 or more in his account and think that you can trade like him and make the same amount of money. It takes baby steps. And if you don't take those baby steps, what's going to happen is you're going to end up like a lot of the traders that you see online who talk about there was a 10-year curve where it took them 5 to 10 years of losing before they actually settled in. And the thing about it is, it was kind of the same way for me too, because I was really self-taught at the beginning until I kind of really got into the groove of things and became very disciplined and understood that this is a business and I had to treat it that way. And why invest in something if you don't, how could I put this? Why investing something if you're not going to truly put your mind to it and understand and understand what you're getting into? I have this thing that I always tell people: if you don't know your numbers, you don't know your business. It's the same thing with like stock trading. If you don't know your numbers or you don't know your technical analysis and your fundamental analysis, you don't know how to trade. You'll never know how to trade. Okay, and this is why I created the video about signal. About you individuals buying stock signals telling you when to buy and sell a stock. Those things don't work. All right. So let's get back on track here. All right. So we have 10,248 stocks. If you have a $500 account or even a $300 account, you would typically start by looking at stocks between I'll say between $5 and $50, right? That would bring your 10,248 stocks down to 6,160 stocks in total. Next, what we're gonna do is we're gonna look at an average volume, right? So your average volume for your stock is going to be hold on here. So your average volume for your stock should be at least over $1 million. And when it comes down to the next step, which would be technicals, I would recommend that you go over to your average true range and you make that about 150, right? So yesterday we did $1 and we had about 101 stocks. Today we did about $1.50 and we're still roughly at about, we're actually a little bit more. We're at 108 stocks, which we should have gone down, but this number changes on a daily basis because this number right here is based off of the last 14 days of trade, meaning for the last 14 days on average, this stock has gone either up or down at least $14. And that brings us down to 108. If you want to bring it down just a little bit more, you can go back over here to descriptive and we can go to country and we can change that to US. And by changing that over to US, it brings us down to 95 stocks in total. All right. So here we are. We filtered through all of our stocks and we've come down to 95 stocks from 10,000 stocks. I typically don't recommend as a new trader, you trade healthcare stocks or you trade ETFs. And that can bring you down to about 53 stocks, right? So from there, you can take your 53 stocks and then you can come back over to Trading View over here and you can do your technical analysis, which is inputting everything into the charts and then seeing where you land. But this is not seeing where you land. I'm sorry, right here. All right, give me a second. Oh. But of course, today was not really one of those really good days for trading. The market was down just about across the board, right? We had a couple different things happening. They're still talking about tariffs. The market, there's a little bit of uncertainty with what's going on in the market. We were expecting an interest rate that did not happen. And when you watch these videos and you hear me talk about the fundamental analysis, which is all the stuff that's happening in the news, it's not necessarily that I'm looking at it and I'm saying, oh my gosh, these are excuses. What I'm doing is I'm saying to you, you have to take these things into consideration, because if you don't take these things into consideration, what's going to happen is you're going to end up buying a stock, and before you know it, you're thinking like all your technical analysis telling you the stock is going to go up, but then the stock may drop, right? And now let's take a look at this stock, for example, right over here. Right, this is a trade that I've been in for a while. Right, and I'm going to just shrink this down a little bit so you guys can see the overall big picture here. All right. So this stock right here, this is our moving averages, right? And I've color coded them. With our moving averages, the green line's on top and it's pointing straight up. Red line's at the bottom. It starts to point straight up. That lets us know that we're in an uptrend, right? So here we are, we're in an uptrend. And this red line up here is an area of resistance, and this is an area of resistance. So we're in this uptrend. We broke through that first area of resistance. It did a little pullback, which it normally doesn't do a pullback like this and go underneath that area of resistance once it breaks through it, just like this one right here. But that was at the beginning of the crossover. So once we're well into the uptrend and it broke through that area of resistance right over here, normally the stock will not pull back, right? But you have to remember, something. We're in a time right now with our current administration. Every day, if not every other day, something different's happening, and there's something he's saying, something he's doing. And it's not that I have anything against this administration or any other administration, but what that means is we have a lot of fundamental things that are happening in the news that could affect all this technical analysis. And when you hear me say technical analysis, what I'm talking about is we have these indicators. Our moving averages, green lines on top pointing straight up, red lines at the bottom pointing straight up, lets us know that we're in a clear uptrend. And here you can see we're in a clear uptrend. This purple section right over here with this purple line, that's our RSI. The red line is the 50 mark. Our RSI, as long as it's above the 50, it lets us know we're good. We're in an uptrend. So everything is lining up to let us know that the stock should be going up. But whenever we get bad news or something happens in the news, the stock market and other traders and investors, they react negatively. And this is why you're going to notice Let's say that this was a particular strategy that I wanted to use maybe 4 or 5 years ago. During an administration that wasn't so active in the news and constantly changing their minds and saying this and saying that publicly and doing things behind closed doors, this strategy of constantly buying right above when the stock closed right above the area of resistance would constantly work. It would break through and it will just continue rising. It will come down, do a pullback, but it would never really break through it. But because we're in the situation that we're in right now, even though everything tells us the stock is going to go up, it's going to continue going up, as you can see here. But what's happening is it's taking time. It's taking a lot longer than it normally would. You see, so we're getting smaller steps over here. Eventually, we're going to go ahead and we're going to break through this area of resistance, and I'm going to sell the stock because I bought it here at this yellow mark. Okay, and this is one of the things that I always try to tell people that they need to be aware of. You cannot have one specific strategy that only takes technical analysis into consideration without taking the fundamental analysis into consideration. What's happening in the market? Like here, the market was. I mean, we had a strong candle, and my expectation was today that this stock would have broke through this area of resistance, or at least tested and touched the area. But with all the negative news happening, the entire market's down across just about all sectors, including this stock right here. So that's the fundamental analysis part right there for this particular stock. Now, this stock right here, VRNT, I ended up buying this today. I bought this stock today. And the reason why I bought this stock today is because we look here, we have an area of resistance right here at about $22.13. I bought the stock at the yellow mark, which is $20.40. The stock closed at $19.82. And right now, post market, the stock is at $19.80. So I'm basically down 60 cents. Our technical analysis, which is all these indicators and everything here, is letting us know that our moving average, the green line, is on top, starting to point up. Red line moving average is at the bottom, starting to point up. RSI, it touched a 50. Today it touched a 50, and we're waiting for it to bounce back up. But this right here just let us know it was above the 50. Hey, stock looked like it's going to continue rising. Of course it went up, but then there was this pullback, okay, because of all of the negative news and everything that's happening in the market, happening out there in the news in general. So clear indication of technical analysis versus fundamental analysis. And I have to keep an eye on this because if for the next 2 days or so we have negative news, it may turn around and be a downtrend. Next stock that we're going to be looking at is DOC. This is another stock that we're in. We bought the stock at $17.93. The stock is currently at $18.19. We're still in the green on this particular one. And I expect the stock to continue rising. Over here with our RSI, I expect the stock to probably come down and test the 50 area mark and then bounce up. If it tests the 50 mark and then it closes below it and it starts going down below the 50 mark, then I will close out because that could be the beginning of a downtrend. All right. Now, there's a lot of different stocks here, and these are all the different stocks that we looked at. And right now, I really don't see any stocks that I would probably say, and with these blue lines, there are stocks that I'm actually on my watch list. And these are not any of these stocks I would look at buying right now, because as you can see today, they were all in red. They're all down. Everything is down straight across the board on the market, right? So when it comes down to stocks, and we have days like this where there's a lot of negative news happening, the market's down straight up across the board. A lot of people may say, "Oh, it's great buy opportunity because the stock's price drop." But what you have to remember is this: the stock prices did not drop because of any of these technical analysis. It didn't drop because the moving averages told it to drop or because it hit an area of resistance. The stock price dropped because of what's happening in the news, all the negative stuff. So what you need to focus more on now is not your charts. What you need to focus on is the news. You need to sit there and say, okay, what's happening in the news? What was said that caused the stock market to go down? And now once that decision is reversed, or the market's like digested that bad news and decided that it's going to recover, then you can buy. Because if you buy tomorrow morning and that negative news has not been resolved, then the stock is going to continue dropping and you're just going to continue losing money. All right. So with that being said, what I did was I went over and I said, and this is why you have to have a really good portfolio, right? Now, this setup that I have here with my area of resistance, my area of support, my RSI, my moving averages, all of this could be applied to, uh, this entire setup can be applied to not only stocks, but to crypto and to Forex, right? Um, I don't say so much to crypto because crypto has a lot of retail traders. And I'm not a big fan of trading crypto like that. I probably have maybe about 4 to 5 cryptos that I trade, but I'm not like a heavy active crypto trader because uh, trading is basically a self-fulfilling prophecy. And what I mean by that is, let me show you here. All right, self-fulfilling prophecy. Here we have our moving averages, right? Our moving averages, we have a red line and we have a green line. Once the red line gets on top and it starts pointing down, the stock market is going to crash. Green line's at the bottom pointing down, stock market's going to crash. Red line's on top pointing down, green line's at the bottom pointing down, stock market's going to go down. It's going to be a downtrend. And because most traders, professional institutional traders, are using these symbols, what that means is when they see this setup, the stock market goes down, right? And then when we have that crossover here, where our moving averages, green line goes on top, starts to point up, red line's at the bottom, starts to point up. Seasoned traders, professional and institutional traders, they use the symbol and they buy because they expect the stock to go up. And you normally don't want to use more than 3 indicators, otherwise they start canceling themselves out. You have your area of support and you have your area of resistance. Normally, you would always see something like this, where the stock comes down, touches that area of support, bounces back up. And because we're supposed to be in a downtrend, it will touch it again. Because what's happening here is most professional traders know when the stock touches this area of support, it more than likely is going to bounce up. So there's a lot of traders who are watching the stock come down. And when it hits that area of support, they buy and they push the stock up and then they sell and then it starts to drop again, right? And the people who are doing these are your day traders, right? These are your day traders, your swing traders. They're buying those dips right there. And because they all understand support and resistance. So it's a self-fulfilling prophecy. Eventually, once it breaks through it, they get out of the trade because they know once it breaks through it, there's a possibility it can continue coming in, falling down. All right. So I don't trade heavily into crypto for the simple fact that when there's a lot of retail traders in there who don't understand, support, resistance, they don't understand moving averages or RSI. Everybody's just buying and they're selling. They're buying and selling purely off of speculation. So therefore, it's hard for a pattern to be put in place. Now, once crypto becomes something wide range where there's a lot more institutional traders or institutional investors getting involved into crypto like there is now, then I'll start getting more and more into it because then I can look, everything's going to kind of lined up with the charts because it's a self-fulfilling prophecy. Right now, you don't know what crypto is going to go up, which one's going to come down because there's complete chaos. All right. There's people out there who are not following the rules. So with that being said, what I've done is I've kind of decided to diversify my portfolio, and I took this exact same setup and I applied it to my forex, right? And I believe, yes, this is the stock that I'm in right now. So I applied it to my forex trading, and right now I am in the currently inside. I'm trading the pair, which is GP USD, and that's the dollar, right? Now, I bought this stock at, you know what, I need to update this information, but I'm currently trading with, um, but when I bought it using, yep. So let's go here. So you can see the actual symbols here because I have this one marked up. All right. So I just got to transfer that over. So when I actually bought the stock, I bought the stock at the price 1.34336, right? Currently, not the stock, but the currency pair. Currently, right now, it's at 1.33935, right? And I expect this to continue dropping and going down. And here's why. Over here are green lines on top, moving averages pointing straight up, red lines at the bottom, pointing straight up. Lets us know that we were in an uptrend. Here you can see where it started to consolidate. Right. I just want to make sure I don't go over time here. All right. So I'm trying to make this about under 45 minutes today. So here you can see where it started to consolidate. And where it started to consolidate, you can see that the stock price dropped from above, between, and now it's under the moving averages, which is the red one. So we expect it to come down. And then over here on our RSI, we can see that the RSI is well below the 50 mark and is pointing down. If we switch over to our 4-hour time frame, over here, you can see on our 4-hour time frame, the downtrend has already happened. The crossover, which is the death cross, has already happened, where the red lines on top, pointing down, green lines at the bottom, and it's pointing down, and we are in a clear downtrend. It's broken through this area of support. It's broken through this area of support. And here we go. We're coming down. And this right here is the next area of support right here with this blue line. And because this is right over here, what's happening now is, and let's increase that. We're just going to have to wait for it to kind of break through here. Once it breaks through this area of support right here, I would not say the sky's the limit because it's going down, but there's practically going to be no limit down there. So it's just going to continue dropping at that point, which is going to be okay. So this is why it's very important that you understand your support, your resistance, your indicators, and you diversify your portfolio, because the stock market may be bad. So you may want to go ahead and start going over into your Forex. If Forex is bad, you might want to go into futures, and you might also want to look at options as well. So there's several different products that you can trade. But once you learn the basics, which is what I teach in my Udemy course, then you'll be able to apply that to different things and, always find opportunities rather than force trades that are not really there because you just feel like you have to jump into something. Okay. That's pretty much it for today. Tomorrow, we're going to look and see what happens tomorrow, but today was a really bad day for the market as far as, nothing was really up. There's a lot of negative news happening. So we're just going to have to keep an eye and see what happens and, what's said in the market. All right. But that's just it. That's it for today. It's not going to be a long video. We're not really going to do any stock picks, because if we pick stocks, and like I said, the issue at hand, which is, what's happening in the news and what's being said in the news is not fixed, then we really, we're going to be picking stocks and, just get losing trades. So I'll be focusing a little bit more on Forex today and tomorrow, and just, diversifying a little bit and buying a little bit more Forex until this whole situation blows out. Because between now and August 1st, I think that there's going to be a lot of institutional traders who are just going to be sitting around kind of watching to see what happens, because on August 1st, if certain trade deals are not put in place, then a lot of tariffs are going to happen, and that can kind of cause the market to crash a lot. Because you have to remember something: institutional traders, they're not day traders. They're holding on to these trades for months, if not years. And so therefore they don't want to buy a stock or be stuck in a stock and a tariff war happens because of the, nobody wants to get a trade deal with our current administration. So that can also be a factor why you see the market kind of coming down as well. All right. So guys, I'm not going to keep you guys any longer. I got to go jump on TikTok now and do a live. So see you guys tomorrow, same time, same place.